Hello, I want to talk a few moments about the classified income statement. So I will go ahead and share the screen and pull it up. Now, classified income statement takes the more simpler, the single step income statement you looked at early on in the course and adds some new classifications to it, some new areas to it, or breaks it down a little deeper in order to give the users more information. The single step income statement you'd looked at before basically just showed revenues minus expenses. Revenues was higher, you had net income. Expenses was higher, you had a net loss. Very basic format. This basically breaks it into more and different areas in order, again, to give the users more information. So the heading is basically still the same. Remember that the income statement covers a period of time, such as a year or a month, typically. And it starts off basically with sales, and then you would have less sales discounts, less sales returns and allowances. Um, Remember that sales discounts are whenever you give your customers the ability to receive a discount if they pay you very quickly for whatever they've purchased from you or the goods they purchased from you. And sales returns and allowances would be for whenever customers return items to you, whenever you give them an allowance, maybe for damaged merchandise or something damaged in shipping or something of that nature. So sales, less sales discounts and sales returns and allowances gives us net sales. Now, cost of goods sold would be next. And cost of goods sold, of course, is the cost of the inventory items that a company sells. And the difference between net sales and cost of goods sold would be gross profit. Think of gross profit as the markup on goods. So you sold them for so much, they cost you this much, and the difference between that is the gross profit. Remember that kind of the goal for a merchandising company or a lot of companies that sell products is to create enough gross profit to cover all their other costs and then to have net income left over. So, our next area that it basically gets into would be operating expenses. And these are typically selling, general, and administrative expenses, and they're laid out here. So, your gross profit minus your operating expenses gives you your operating income. Now, operating income is one of the most important measures of a company's success because operating income looks at how profitable is a company from their main business operations. And in the long run, your main business operations have to drive you with profitability to support growth and to support basically your business being a profitable business, profitable organization. That has to come from your main business activities for you to survive in the long run as a company. Now, the next section would be other revenues and gains or expenses and losses. Now, what this next section looks at is basically any other revenues and gains or expenses and losses that are not from your main business activities. Some examples here: interest expense, you see that I've listed here, interest revenue, gains on sales of assets, losses on sales of assets. That would tend to be things that would be listed here. Things that are not within your ordinary course of business or your regular operating activities, but do affect income, and they would be listed here. And then you would take basically operating income minus your total other revenues and gains, expenses and losses, and you would come up with your net income. So notice that the multi-step income statement is broken out into different areas, broken down more in order to give users a greater information or greater knowledge of the information that is on them to where they can use them in better ways to make business decisions.